This is Cece. Welcome to the Orbit. It is Friday, January 26th. We've got S&P futures more or less unchanged. We've got NASDAQ futures a little bit lower into the open. That is mostly due to Intel. We will talk about that in a second. But let's look at 0DTE and expected moves for the day. Right now, we've got about a 0.4% expected move. The levels on the SPX there pre-open from yesterday's close would be around 49.15, let's call it, and 48.70, let's call it, to the downside. So some levels to watch for, and then of course you're going to look at that open. I mentioned this on the Twitter feed on Options Learn yesterday. Yesterday was an example where SPX was up in the morning about 0.5%. And so on that feed, we went over selling a credit call spread at the new expected move, the newly established expected move, both for 0DTE, and we were looking at today's close on that as an example and as a lesson. And then the market pulled back a little bit, went close to unchanged on the day, and we showed an example of legging in to an iron condor for today's close, using a credit put spread and using the market's own momentum against itself to leg into an iron condor at a 3, risking 3 to make 2 ratio, but establishing it much wider between its short strikes than would be possible if you just entered an iron condor using the expected move at this time. So that's something to look at and consider at these low IV levels, where you're looking at an iron condor at today's expected move, and you might see that it's pretty tight. You're seeing it at around, it might only be 40 wide or something like that. And in that case, what we were showing yesterday was how to get it to about 70 between the short strikes. Now back to the SPX. Again, we've got that 0.4% expected move. We are looking at a more or less unchanged open. Looking out to Monday, we've got about a 0.6% expected move. And then going into the end of the week, next Friday, we're about 1.3. So low vol across the board. Now, what's interesting here, speaking of low vol, is I mentioned that the Qs are down about 0.5% on the day. Its expected move for the day is about 0.7%. So it's not a significant move to the downside. But a lot of this is, and you're going to see this probably every morning for the next couple of weeks, you might see the Qs reacting a little bit more overnight and in the morning to what's going on after hours. And last night we had Intel down about 10%. The expected move was more like 7%. So it's not like this move is massively more than what was expected, but it is still pretty significant, about 3% more than what options were pricing. And we are seeing this fairly consistently. This is a little bit anecdotal because it's so early in earnings season. But if you think about it, we've now seen Tesla, we've seen IBM, we've seen Netflix, we've seen Intel. It'll be very interesting what happens on Microsoft and Alphabet early next week. But we are definitely seeing stocks make moves that are more, especially these big cap tech stocks. We are seeing them make bigger moves than what options were pricing. Now, what's going on here? Well, we've been talking about this on the Orbit, and it is basically that these stocks cannot separate themselves from the low IV backdrop. You look at a chart like this in Microsoft, and clearly that looks like a stock that could see some volatility into earnings. Look at those runs, right? However, it's still in a backdrop where the market is not moving much. It's where the market is only pricing about 0.5% move a day, the overall market. And even the Qs, it's a 0.7% expected move in the middle of earnings season. And so it is difficult for these stocks to escape that vol, that low vol backdrop, yet they have an earnings to report. And those options might be a little bit underpriced, or at least from the same signals we've seen so far. And so you need to be very careful if you are selling expected moves, as we've seen right now over the last week. If you were selling the expected move in the 4 stocks I mentioned, it's pretty obvious what's going on is a VIX at 12.5 is affecting some of these expected moves. Whether that continues next week, we'll see. It's still very early, but it also is the type of thing that could pick up overall market volatility a little bit. You wouldn't need much if you had a couple of bad reports stacked on the same day or the next day in some of these mega cap tech companies that go next week, enough to get the Qs down a little bit that morning. That might be the type of thing that kind of picks up, especially zero DTE and short duration vol over the next, say, 2 to 3 weeks. It would be enough that probably tick that IV up a little bit, because people are going to be a little bit more nervous from day to day that some big earnings miss or earnings beat might really move the market the next morning.